1. Basic overview item details, company name and ticker, CRCL Internet Group. Inc. Country exchange United States, listed on NYSE sector, industry technology/fintech and infrastructure. Stablecoin and blockchain-based payments, Simply Wall Saint market capitalization $44 billion Simply Wall Saint share price $192.86. R. Business model and operations products and services. CRCL operates as the issuer and infrastructure provider for the USD-pegged stablecoin USDC. Supports payments, tokenized funds, liquidity services, multi-chain transfers, and software tools for institutions and developers' revenue streams. Interest income from collateral reserves backing USDC fees, and subscription revenues from developer institution tools and liquidity services, transaction and integration fees, geographic split, primarily US-based. With expansion into Singapore and Europe, in 2023, full geographic revenue. Breakdown not publicly reported but majority. Likely domestic given licensing footprint 3. Key financial metrics, metric value PE ratio, approximately 2,259 times. In Moaning, Simply Wall Saint PB ratio, approximately 59 times. Simply Wall Saint dividend yield 0% debt to equity ratio, approximately 0.03. Return on equity not reported current ratio approximately 1.02. Quick. Ratio approximately 0.023 year revenue growth not available. TTM revenue, $1.89 B net profit growth, TTM net margin approximately 1.03%. Simply Wall Saint EPs $0.09 per share for. Balance sheet, strength total debt, very low. Debt to equity approximately 3% cash reserves, historically high for example. $1 billion buffer, including reserves at BNY Mellon. Net debt position, likely net cash, given minimal debt and solid cash reserves, free cash flow. $44.9 million. Financial Simply Wall Saint 5. Management and shareholding key executives. Jeremy Allaire, CEO and co-founder, CFO and chairman, not publicly highlighted in sources. Recent board addition, Adam Silipsky, institutional promoter shareholding, institutions VC payhold, 37%, insiders including General Catalyst Aller, approximately 7.5%, FMR approximately 5.9%, Briar Capital approximately 5.7%, Oak, Axel, etc. Compose approximately 50% ownership, 6. Competitive analysis, main competitors, Coinbase Global PayPal Holdings. Other fintech firms exploring stablecoin offerings like private banks, neobanks competitive advantages, USDC leadership, second largest stablecoin, globally with regulatory compliance and institutional backing, regulatory licenses, US BitLicense, wide US state licensing institutional ecosystem integration, growing adoption via partnerships. 7. Valuation analysis relative to peers in history. PS, approximately 23 times, and P, B approximately 59, are far above peers and sector averages PE extreme at 2000. Earnings minimal relative to market cap analyst sentiment, consensus rating, neutral average 12-month price target $194.74, implying approximately 1% upside. Recent downgrade, Compass Point cut to sell. Target $130 citing new stablecoin regulations forcing interest sharing and rising competition. Investors.com valuation conclusion currently appears overvalued relative to fundamentals and peers, largely priced for growth and regulation clarity. 8. Growth prospects expansion of USDC across additional blockchains, for example. Solana pilot via Visa. Binance institutional collateral acceptance. European base and Singapore license support. International growth strategic board additions may support scaling infrastructure industry trends. Rising stablecoin adoption and payments, remittances, blockchain finance. Regulatory clarity in us may either accelerate or constrain growth, depending on policy outcomes, regulatory risk from U.S. stablecoin legislation. Competition from banks and other fintechs launching rival stablecoins. Profitability risks. Minimal net margin. Weak free cash flow relative to valuation. Highly volatile stock price. 10. Final summary and recommendation for a long-term. Defensive investor. Strengths: market-leading stablecoin infrastructure, well-capitalized, minimal debt, strong institutional ownership and partnerships, regulatory footprint. Weaknesses: extremely high valuation relative to revenues and earnings, minimal profitability, regulatory and competitive uncertainty. Recommendation: given current fundamentals and valuation, CRCL appears overvalued and speculative. Until the company demonstrates sustainable earnings growth, margin expansion, and regulatory clarity, it may be more appropriate to wait or limit exposure. A more defensive investor might consider a smaller position with strict risk controls or focus on better valued fintech alternatives instead.